All right, well, we started out a little firmer this morning here on the daytime session on the grains. Let's see if we can hang on to it. Let's go check out our quotes provided by Bar Chart. We'll start with the corn, and on that corn market right now, we'll go with that September contract. It is, well, now it's down a half cent. We're at 5.30 3/4. It's just kind of floating along right now. You have December corn a penny and a half lower. It's at 5.35 1/4. You know, that range isn't all that wide today. It's only about 11 cents from top to bottom in that December contract on the corn. Things got pretty quiet today. Of course, we do have a couple fairly large reports coming up tomorrow, and we'll talk more about that in a moment. August soybeans right now 2 higher at 13.63. Gosh, haven't seen moves this small in quite a while. November is now just 1 3/4 higher at 12.66 3/4. So kind of steady as she goes there, a little bit firmer. On the wheat trade, same story. September Chicago wheat up a penny and a quarter at 6.71. It's about 7 cents away from our overnight high. And if you look at Kansas City wheat, now it's going the other way. We're down a penny and a half. We're now trading September at 8.04 1/4. And we're now about 11 cents off of our overnight high. We're getting within 4 cents of our low of the day at this point. Now looking at Minneapolis wheat, we have September 10 1/2 higher at 8.28 3/4. So it's reacting differently to the news today. Let's check out cotton and see what's going on there with that new crop December contract. Right now, it's up 17 points at 77.53 per pound. I want to welcome aboard Chris Swift of Swift Trading, and he is based right here in Nashville. Always a pleasure to visit with you there, Chris. Thanks for the time. Things getting really quiet and a little bit choppy. I tend to call these meandering markets where they go a little higher, a little lower. They just kind of roam around, and it's like no sense of direction today. What are they waiting on? Are they waiting on the reports tomorrow? Are they waiting for rain to verify in the Midwest, or what do you think?
Well, there's a series of events now that's going to have to take place. We need to find out what the acres are with a guesstimation of 92.5, 3.5 million acres more than last year. Anything under that makes the yield much more crucial. And we really, although agronomists will look at that and say, okay, with this amount of drought we've had, lack of rainfall, then we clearly can see that the yield's going to be impacted by X. We won't know that until July 12th when we get the WASDE report out then. So we first start off with the acres, and we find out how crucial the yield becomes once we know how many acres that we're dealing with. And probably more than anything out there is just the aspect of how volatile the market is and what opportunities are being presented to both procurers and producers of corn there. The cattle feeders less than 4 days ago were sitting here faced with over $6 corn. Today it's at $5.30. It might be $4.30, but it could be $6.30 again just as quickly as it could be $4.30, depending upon these crops. And when you look at the drought monitor today, and even though I understand there's more rain forecasted, and you look at the maps of where the crops are grown, they are dead center of one another. So we're going to have some issues out there. We just don't know how severe they are yet, and probably got another 30, 45 days to go before we find out.
And I know that, well, Tim Ross and I were talking about the fact that there could be a lot of severe weather in the central part of the Corn Belt. It's a good news, bad news scenario, isn't it? I mean, they need the rain. It looks like they're going to get the rain, but gosh, you have to harken back to a couple of years ago when we had that derecho, and well, that was too much of a good thing with all that wind. So I hope that doesn't happen again. We have the estimates for the planted acreage report that you were just referring to there a moment ago. And the estimates are provided by the Wall Street Journal, and they did a survey of analysts around the country. And on average, Chris, they're talking about a 91.81 average guess for the corn acreage. Soybeans, they expect it to be a little over 87.5 at 87.6. The all wheat at 49.65 million acres. Winter wheat, 37.32. And then spring wheat at 10.49 million. And I thought it was a little interesting where the spring wheat and the winter wheat acres, well, the all wheat number too, I guess, were all just a little bit under what USDA had thought back in March. So I imagine that's probably somewhat weather related, but I wonder if we're really going to get a good feel for how much wheat had been abandoned by the time we get this report. I have a feeling it'll have to be further down the road, don't you?
Oh, absolutely. Because what are they, about 50% done right now on the wheat harvest? I think is what they had said before. So we still got a lot of time, and of course that is such a world market, much more so than corn and soybeans, that everything else impacts that wheat along with U.S. production.
Okay, well, I tell you what, let's take a break here, Chris, and I want to get your thoughts on the export sales numbers that we had this morning on the meats, and we'll see how the trends are holding up here in the livestock markets as we take a look at our trade when we come back. Okay, let's flip the coin and take a look at our livestock trade now. On our quotes from bar chart, we begin with live cattle, and currently on the big board, we'll go with that August contract. It's down by 40 cents at 173.47. You know, it really hasn't changed much from when we opened up this morning. It's kind of in the middle of its trading range. We have the October contract down 12 cents at 176.90. So just not too much movement. If anything, that August is showing a little more weakness than what the deferred contracts are. Now, on the feeder cattle trade, wow, it's just pretty consistent across the board with losses of about 20 to 32 cents, we'll call it. August is down 27 now at 239.97. September is down 27. So it's showing a last trade of 243.45. That's about 90 cents off of its early high that it made right at the open this morning. And then if you look at lean hogs today, well, you currently have the August contract 62 lower at 90.47. And you have October down 72 at 78.65. It's interesting where they are about 40 cents. Well, at least the August is 40 cents off of its earlier high of the day. So a little weakness there in the lean hogs. Now, the beef and pork export numbers were out this morning. As I mentioned, nothing too stellar there the way it seemed. The beef came in 12,000 tons sold last week. Pork came in at 26,700 tons. In both cases, it was a little bit below what we had the previous week. Beef sales, they say, were down 9%, and the pork sales were down 7%. Let's go back to Chris Swift. Is that very concerning to you that they're down a little bit right now or not?
Not really, because they've not been up any time. So it's just kind of following the trend right now. And I think price has a great deal to do with it in the beef market. We're the only ones who sell grain-fed beef, and the rest of the world likes it, but it's very expensive right now. The pork market, every country produces pork of some kind or the other, and we've been relinquishing our pork production for months on end. So I don't think it's anything out of the normal right now.
I want to take a look at the beef cutout values that came out yesterday afternoon from USDA. And yeah, they were down a little bit. Let's take a look at the choice cuts yesterday. They were down $1.33. That put them at $327.90. And I'm looking at the printout from USDA. That compares to $334.25 that we had a week ago. So we're off of that level by, gosh, about, $7 now at this point. Select cuts were down $1.75 at $296.68. And a week ago, it was $304.25. So that is also off of the pace from last week, but in this case, about $8. And isn't that going to make it hard for the livestock futures and even the cash cattle trade to really respond much?
I think so, because boxes probably have already turned lower for the year seasonally. All of the 4th of July product is already sitting on the grocery store shelves for this weekend. So I really don't see much afterwards. Probably the biggest thing that I noted today was we got the first quarter final GDP at 2%. Raise it, showing more inflation, and unfortunately what that did was tanked the bond market, down 2 big points right now. And more than anything, it kind of suggests that the Fed will have a much heavier hand on any kind of inflationary action that they take on the next FOMC meeting. So with that in mind, you got to think that the consumer should be prepared for another rate hike and maybe some harder times down the road with still inflationary commodity prices, whether that means beef, gasoline, whatever the case may be. We're not seeing anything draw down as far as consumer demand or increase in supplies.
That's a good point. Yeah, I keep hearing more and more of that talk now. Thank you, Chris, for the comments. Appreciate it very much. Chris Swift of Swift Trading, and he is based in Nashville. Yeah, not only do we have the